It never begins with announcements. It begins with whispers, a leaked memo, a late-night meeting, a sudden shift in the numbers that only the sharpest eyes can see. And then, quietly, the world's balance starts to tilt. Picture this: March 6th, 2025. The Oval Office. President Donald Trump signs an executive order that will echo across financial markets from Wall Street to Shanghai. With the stroke of a pen, America officially begins stockpiling Bitcoin as a strategic national asset. But 3,000 miles away, behind closed doors in Beijing, something unexpected is happening. Chinese government officials are gathering for high-level discussions about cryptocurrency. The same government that once restricted Bitcoin activity is now quietly evaluating the idea of building its own strategic reserve. This is empire economics, where history and money collide. And what you're witnessing isn't conflict. It's monetary competition, not fought with tanks or missiles, but with code, algorithms, and digital currencies that could reshape global power for decades. The irony is almost poetic. For over a decade, China treated Bitcoin like a risk to financial stability. Mining operations shut down overnight, exchanges restricted, citizens warned away from digital assets Beijing couldn't regulate. Meanwhile, America remained skeptical, with regulators calling crypto everything from a speculative bubble to a cybersecurity concern. But priorities evolve, especially when global power dynamics begin shifting. Trump's executive order creates what officials are calling a digital Fort Knox. The strategic Bitcoin reserve will hold over 207,000 Bitcoins seized from criminal operations, worth roughly $17 billion. But the real ambition goes far beyond that. The proposed Bitcoin Act aims to acquire 1 million Bitcoin, around 5% of the entire global supply. David Sachs, the White House AI and crypto czar, made the strategy clear. America intends to position itself as a global leader in digital asset infrastructure. But here's where the story takes a fascinating turn. Within weeks of Trump's announcement, reports began circulating that raised eyebrows across crypto markets. China, the same nation that once drove miners and exchanges offshore, was reportedly conducting private conversations about establishing its own national Bitcoin allocation. David Bailey, a prominent crypto advocate, claimed Chinese officials had been meeting behind closed doors since the election. The message was unmistakable. Beijing was reassessing Bitcoin at the national level. To understand why this matters, you have to recognize what Bitcoin represents beyond headlines and speculation. Bitcoin isn't just digital money. It is absolutely scarce. Only 21 million coins will ever exist, and almost 19.8 million have already been mined. Unlike gold, which can be discovered, or fiat currencies which can be expanded through policy, Bitcoin cannot be inflated or recreated. When nations begin competing for a limited resource, the dynamics shift dramatically. This scarcity creates a first-mover advantage. Countries that accumulate Bitcoin early don't just own an asset, they secure influence in a potential future financial system. But Bitcoin is only half the story. While the United States explores decentralized digital assets, China has been advancing something fundamentally different: the digital yuan, or ECNY. Where Bitcoin operates without central control, the digital yuan is a fully regulated digital currency designed to streamline payments and increase oversight. Where Bitcoin offers anonymity, the digital yuan is structured to ensure transparency within China's legal and regulatory frameworks. The transaction volumes show its momentum. China's digital yuan processed $2 trillion in payments in just 14 months, nearly doubling from the previous period. The strategic picture becomes clearer when you zoom out. In September 2025, Beijing opened an international operations center for the digital yuan in Shanghai. Governor Pan Gongsheng emphasized goals such as improving efficiency in cross-border payments and reducing costs in traditional financial channels. In other words, China is modernizing its payment systems in ways that reduce exposure to external financial risks, and it's already visible in real-world transactions. In October 2023, PetroChina completed the first international crude oil trade settled entirely in digital yuan, purchasing 1 million barrels of crude. Saudi Arabia executed $4 billion in oil contracts using Chinese currency. Each transaction signals a gradual diversification in global trade settlement methods. The BRICS alliance is amplifying these developments. China, Russia, Brazil, India, and South Africa launched a digital settlement platform in 2024, an alternative network designed to increase payment flexibility among member nations. This isn't about replacing the dollar tomorrow. It's about creating options. What makes this monetary competition so consequential is that America and China are pursuing opposite philosophies. America, decentralized assets, open networks. China, centralized digital currency, integrated networks. Two visions of the future. Both powerful, both spreading quickly, and timing matters. Each month that passes allows one system or the other to gain adoption, accumulate reserves, or expand its payment rails. China's Supreme Court has held internal discussions on how digital assets may be treated in future legal frameworks, suggesting rapid policy evolution. Meanwhile, the Trump administration is moving quickly to make the US a global center of innovation in digital finance. What happens when two economic superpowers pursue incompatible systems while competing for a finite asset? History shows that these transitions reshape global commerce, not through confrontation, but through adoption, incentives, and network effects. America's Bitcoin reserve strategy gives it early influence over decentralized systems. China's digital yuan infrastructure gives it influence over centralized digital payments. Both are long-term plays, both rely on global participation, and both face challenges neither nation can fully predict. Bitcoin's success could loosen traditional monetary control. The digital yuan's success relies on voluntary international trust and adoption. Energy dynamics influence mining capacity. Network effects determine which systems achieve global scale. Businesses ultimately choose which systems they trust. The early signals suggest a world gradually forming two overlapping monetary ecosystems. Nations aligned with China using digital yuan rails. Nations aligned with the US exploring Bitcoin reserves and stablecoins. Neutral countries blending both approaches based on trade needs. This fragmentation isn't instability, it is evolution. The hidden winners may be mid-sized nations that position themselves as bridges between competing systems, much like Singapore has done in traditional finance. Smart contracts, programmable money, and automated compliance could revolutionize global trade. And whichever nation sets the global standards will influence commerce for generations. History teaches that transitions between monetary systems are rarely smooth, but they always create opportunity. The collapse of Bretton Woods reshaped currencies for decades. The rise of the euro transformed a continent. The digital era may reshape the entire planet. What happens next will be determined not just by governments, but by businesses, developers, and individuals deciding, one transaction at a time, which financial systems they trust. Trump's Bitcoin executive order and China's evolving digital strategies represent far more than policy shifts. They highlight a turning point in the architecture of global money. The irony is profound. In trying to protect their monetary influence, the US is embracing a decentralized asset it cannot fully control. China is promoting a centralized system that relies on global partners voluntarily adopting its structure. Monetary transitions are inevitable, but their outcomes are shaped by those who prepare early. The digital currency competition has begun, but its conclusion remains unwritten. And in a world where money itself is becoming programmable, the greatest advantage belongs to those who stay informed, stay adaptive, and understand that financial revolutions reward the prepared, not just the powerful. This content is for educational purposes only and does not constitute financial, legal, or investment advice. If you enjoy exploring how history and money intertwine, subscribe to Empire Economics for more untold stories.